Hi, everyone. Thank you for joining us again. Hopefully, you're joining us directly after the other video that we just aired about the Kingston Properties APO prospectus review. So we're here live with the CEO, Kevin Richards. Kevin, thank you so much for joining us. We are really looking forward to this discussion with you here tonight.
Likewise, and thanks for having me. And before we start, I just want to give you guys a big up because financial literacy is a passion of mine, and not many people are in the space that are doing it. And I'm very happy that more and more people have started to do it because my big goal is to have far more persons participating in the markets, all the different investment classes that are
Yeah.
available than currently exist, rather than putting your money in a savings account.
And
So
and,
I'll,
and that
I'll
is our
start on
hope
that
as well.
soapbox.
Yeah, that is our hope as well. I was saying to someone today that when we look at our total audience, I'd love to see that grow by at least 1,000% in the next, 3 to 5 years. And that's a push that we
Yeah,
want to
yeah,
make. So yeah, thank you so much. So what we did just a few minutes ago was we went through the prospectus. We did have a few questions as we normally do when we go through in that way. So we're going to ask you some of the questions that we had. And then what we'll do is take some
sure.
questions from the audience as well. So we'll go through as much as we can. If there's anything that, well, I'm not assuming there's anything that we won't be able to answer. So I'm looking forward to this here. For those of you who are joining us, let us know where you're joining us from. Let us know your question so we can be sure to share it here and get the answers that we're hoping for. So the very first question that we're going to ask. So in your prospectus, you shared a kind of 3-tier strategy for the company, right? So you shared your core business, greenfield projects, and value add. Now, Chike and I kind of had a little discussion about this because I think that's an excellent model. Value add, I see great opportunity. But talk to us about that makeup. Why that target allocation, and what are you hoping to accomplish with it?
Yeah, sure. So we looked at different categories of real estate. And just for those who haven't looked at the prospectus yet, I'll just go through it quickly. Core is essentially those Class A properties where you're going to be earning rental income. You don't need to do any improvement. It's almost like a bond. You're just collecting the cash flows. At the other end of the spectrum, you have what is called greenfield or ground up, and these are usually your developments. So those are stuff like things that your projects that you're taking out of the ground. It could be a conversion, say you're converting an office into a condo building or a warehouse into an office or residence or something like that. And right in the middle of that, you have what is known as the value add strategy. That is usually a property that, is probably in a very good location. Rents are on the market. It's probably could be managed better. And it is highly marketable, as in people would want to be in that property because maybe of its location or just some special features of the property. We've been focusing on that value add strategy for the last 5.5 years, I'd say. We've acquired a number of properties, gone in, made improvements to them, changed the tenant base. Obviously, by changing the tenant base and having done the improvement, you can increase the rents of that property. And by virtue of that, you're now able to increase the value of that property. And I think in our prospectus, we gave one case study. I mean, it can be replicated. We could identify a number of other properties the same in a number of properties that we've acquired. And that strategy has worked for us very well for the last 5.5 years, and we expect to continue along that vein. What we have found is that there are some gaps in the markets. For example, in the industrial space, we found that there are a number of persons who make requests for smaller warehouse spaces that they can use, what we call flex space or multi-purpose, multi-use spaces. So, for example, you could take a retailer who may have an operation in a high traffic retail location where they're paying a very high rent. They've probably built up a brand enough so that, they may look at it and say, why should I be paying, let's for argument's sake, say $10 per square foot in rent in this location when I could go somewhere else and pay half of that. And in that same location, have my storefront, my warehouse, and a little space for office. So that is where a lot of demand is shifting now because people are becoming more cost conscious, and we're hoping to fill that gap by developing a property that we acquired last year in the Crossroads area for what we call small bay or small warehouse properties. A second one is that people are moving more towards sustainability. If you look at some of the existing properties, most of those have been built over the last 30, 40, 50 years ago. And, how we operate in office spaces is different from back then. We want more open space. We want more natural light. We want more fresh airflow to the building. So there's a greater focus on sustainability, and we're looking at building a multi-story commercial building that is, going to be green focused. We did talk about our green policy and our plan to have green certification for our properties in the next 3 years. So sustainability is a big thing for us.
Yes, and that was actually one of the questions I believe somebody was asking about on Twitter. So they were asking about the company's approach to being green and some of the steps that you're taking. So I think we can kind of speak to that a little bit more later. But in terms of the core strategy, one of the questions that Chike had is he was concerned, being the kind of investor that he is, the core being brought down, right? Because why bringing it down instead of keeping it where it is? Because that's your consistent income, your bread and butter. Why would you want to specifically move from that mix?
Well, actually, the value add is are consistent.
It's actually their bread and butter.
The core is, I'll give you an example of what would be core. The condos, for example, would be core. Because those, again, with core assets, the yield is going to be much lower than you get on a value add asset.
That's what I was
So we
thinking.
want to continue to boost the yield on our portfolio. So we're still going to keep some core, but our focus is always going to be on the value add because A, your cash flow from day one, and two, you get the benefit of higher capital appreciation, which at the end of the day, it's going to boil down to returns.
Yep.
Yeah. So I agree. I fully agree because I definitely see that, and just from the returns that you got on the property on Grenada, I definitely think it's worth exploring more of those opportunities. So in terms of now the mix of your properties, right? So you have a large concentration in Jamaica, and then I see the next largest is Cayman, right? So what are the expectations for the properties that you have for those two locations? And I'm especially curious as to how you see the US holdings growing because I see that's the smallest piece of the pie.
So there are various things that we look at when we're expanding the portfolio. The first thing we do is that we primarily focus on jurisdictions that rank highly on the World Bank's ease of doing business. If you're going into a new territory, you want to be sure that systems work. So we focus primarily on those territories. The other thing is that we look at fast-growing economies that we see that over the next 5 years or so, they're likely to be growing at rates greater than 4% per annum, continuing. And certainly we see that for both the US and the Cayman Islands. We still remain bullish on that. Jamaica is also in recovery mode, and even prior to the pandemic was on a growth trajectory. So we're very comfortable with those jurisdictions. The US still remains the largest and most important economy in the world. I don't see that changing anytime in the foreseeable future. So we want to be in that market, and we want to continue to deepen our presence in that market. What we've been doing is try and observe the trends, because a part of our process is just to look at the trends. And some of the trends we've been noticing is the growth in multifamily as an asset class, largely because it's a residence. People need somewhere to live. But what's been happening is the shifting migration patterns of folks in the US. People are, and I think the pandemic was a catalyst for this, is that people started moving into, low cost, let's call them low cost states. States where state income tax is either zero or very low.
Right.
General cost of living is low. So you see people moving into warm states as well. So we've been focusing on assets in what is called, that region that's called the Sun Belt. So that's region from, you could say, as far north as North Carolina, the sea, or well, I know my U.S. geography, North Carolina, so Carolina, Georgia, Florida would be a part of that. There's some other states too, but we'll skip over those. We'll go and then add Texas. Those are the main states that we've been looking at opportunities in those markets. We've been looking at multifamily primarily because of the prospects there. We've seen rent growth in those markets, north of 5% per annum, and in some cases, double digit, which is higher than inflation. And the other thing is that we also would like to identify industrial properties in the region, but we've not been able to identify a deal because, as you can understand, with the pandemic, industrial properties has become the hot asset class that everybody's been trying. And so the yields are not there that meet our required return. So we've not been able to strike a deal in the industrial space. But we found very good opportunities in the multifamily space, largely because of our strategy of working with partners, people who are familiar with these markets, have long-established track records in these markets. That allows us to enter those markets with ease. So we've gone into partnerships, and I think we've highlighted in the prospectus our first acquisition in Atlanta, which is a 155-unit multifamily property, and we're looking to continue to acquire more properties in that space. So in terms of what the mix is going to look like, it's situational, but we're focused on those three economies. As an outside one that we've been eyeing for a number of years is the DR, Dominican Republic. We just haven't been able to strike a deal in that jurisdiction just yet. But we still think that the other jurisdictions still have a lot of untapped areas, which would provide great value for us.
Okay. So Lance from the chat is asking, the approach that you're taking to expand to the US, and I think you just kind of addressed that. So the only thing I'll probably ask you to clarify there. So your full residential, there's a split that you showed in the prospectus of the residential being 11%, I think it was. That's solely the property in the US that make up that 11%. Because do you have any residential?
Some of the shopping center building in Cayman. Yeah, the shopping center building in Cayman has some residential.
Okay.
But it's primarily in the US.
Okay. All right. Cool. All right. So the next question that we have for you there is, one of the things that we saw in the prospectus while we're on the topic of speaking about property, the occupancy for Ashernine Rd was at 66%. Is that still the case, or that was just maybe when the numbers were being put together?
Yeah, that's as at the end of December 2021. Mm-hmm. So between November and the end of January, the property was being renovated for new tenants, and that new tenant has been in since the 1st of February. So we're fully occupied in all our properties.
Okay. Because I noticed a trend for 100% for everything else. So I just wanted to understand if there's any delays there in terms of making that available. Okay, great. So in terms of
something to be expected with the value add. Sorry, I need to make this point. It's something to be expected with the value add proposition because, as I've outlined in the strategy, you're going and make improvements in the property and you adjust rents go to market. That's how you actually generate the high returns on that asset.
Yeah. Okay.
So you'll have some periods of void.
So that makes me think about a question. So is it that, since you're 100% occupied now, is it that you find that you have more demand than you're currently able to supply?
There's a huge gap, which is why we're going into, as I mentioned earlier, the greenfield, because there's very little inventory out there, particularly in the industrial space. And that applies to both Jamaica and the Cayman Islands. There are two countries that have a high propensity to import. So trading is a big deal. So there's great need for warehousing space. And there's not a lot of that out there. And, if you think about real estate, the first thing that comes to people's mind, they always think about residences. They never think about residential space. They never think about the commercial space. So a lot of money has gone into residential everywhere in the world. It's not just Jamaica, but not much has gone into industrial. And the truth is, global economy has been growing, so there is a demand for commercial space, and we're hoping to fill that void. Well, at least put a dent in that void.
Yeah.
I have a question. You just said it actually with respect to the commercial space and demand that is being that cannot, the supply is not there right now. You've reduced the footprint in the United States based on the residential space in terms of the condos and stuff, because at the time 2008 was when you were really post 2008 you had really exploited that area really well and the returns were excellent, and then everything started to turn on its head and it started to go down, and you slowly have exited the residential area space. So the question to ask, as you've just stated with respect to a demand for commercial space, especially warehousing, especially with the fact that Cayman Islands and Jamaica does a lot of imports, right? It's all about closeness to your trading partner. I don't know if you can answer it, but have you shifted, or are you in the process of looking at the focus of commercial warehousing space within the close proximity of both Cayman and Jamaica in the US now, instead of real estate? I know you might not be able to answer it, but I'm just curious.
We have been looking at deals, but again, they just don't currently meet our return metric, just because, I'll be honest. I mean, if you're looking at, I'm hearing of deals with a return of 3%, whereas, I think in the prospectus, we're earning north of 7% per annum on our in rental yields. So 3% is, and to be frank, 3% is kind of where we were with the condos, which is why we've exited that category and moved into higher value properties.
Okay.
Another question on that then.
Properties,
Right. So another question on that is this: are you adequately, based on your metrics, processes, etc., are you confident that should the market automatically turn on its head to basically present that opportunity for you, you'll be able to capitalize immediately on that before everybody else tries to rush in and beat you out in that manner? Right?
So one of the good fortune that we had in 2020 is that we had done our fundraise at the end of 2019. So we went into 2020, went into the pandemic, being with cash, holding a lot of cash. And that is actually the best time to be buying properties, when the markets are depressed. So we acquired, what I think were two really distressed assets, and they've performed very well for us since acquisition. So this is part of the reason why we're doing this fundraise at this time, because it's always better when you're entering into a market with cash. You're making an offer to a vendor. If your offer is cash, you obviously can get good deals because you could get a discount on the price relative to someone who's funding, who's doing it with financing. And as well, you can close a lot quicker. So your transaction time is smaller, so it's sooner for you to start booking that income. So it is important for us to maintain a certain level of liquidity. I think as at the end of 2021, I think it's about 2.7 million US that we have in cash resources. And we want to maintain as much liquidity as possible just to take advantage of opportunities when they come up. Because, particularly if you're talking about the States, you're competing with large funds, you're competing with deep high net worth individuals. So it is a very competitive space. It has its pluses and its minuses. Pluses in that it's fairly liquid a market, so it's easier to exit a market than that because there's a large pool of potential buyers.
Yeah.
But the negative is that you're competing with them when you're on the buying side. So,
Right.
Yeah.
At the end of the day, it's going to boil down to yields, and every transaction is situational.
Yeah. So I definitely want to talk about yields later, especially the dividend. But I'm saving it for now. Carl is asking from YouTube, is asking, do you have any plans of acquiring warehouses to facilitate the booming e-commerce within the US?
Acquire it in the US?
Yes. If you're
So.
looking to
Right. As I said earlier, as I said earlier, we've been looking at opportunities there, but the yields have not been as attractive as we would get.
Yeah.
We could identify
Okay.
properties in other markets at 2 or 3, even 4 times those yields.
And that makes sense. That makes sense. Go where the fish are swimming and are abundant. So yes.
Yeah.
Agreed.
Yeah. Thanks, Carl, for that question.
It's
So
not a
the next
charity.
one, shareholders have demands, right? So next thing that I want to ask you here, Kevin, is can you tell us what you're envisioning in terms of the next 5 years, in terms of that makeup, right? So we know the target allocation in terms of your strategy, but there's not necessarily what, if we were to have this conversation in 5 years, what would you envision Kingston Properties looking like at that point, right? Is it going to be mostly, more global than local? Is it more of the certain type of properties that you have right now? What are you hoping to be at that point?
Yeah, I'll have to go back to what our motto is. Buy local, own global. So it is going to be more focused on outside of Jamaica. And the portfolio composition is going to vary at different times because you make acquisitions, you make disposals, so those percentages change at different times. But our focus is going to be largely primarily assets outside of Jamaica because and that's primarily why we're a US dollar business, is that we want to be giving persons a risk-adjusted return on your investment, and investing through it is through hard currency. You're guaranteed hard currency leases, certainly when you're outside of Jamaica, although some of our leases here are in US dollars, affect US dollars. It's always easy to be operating in markets where, hard currency markets.
Okay. So actually, on that note of being, focused in hard currency US, I know one of the questions that we had in our Telegram group, somebody was asking if there's any intention of giving your shareholders the benefit to determine the currency of their dividends. I'm not sure why Imran had that question. I think
I'm not sure why though. I'm not sure why. We pay dividends in US dollars. We have a very efficient banking system. So if you'd rather have Jamaican dollars, the bank will honor your US dollar dividend.
I'll not see. I'd prefer my US dividends. Yeah, thank you.
Yeah, I think maybe I'm wondering
most people do.
US account. I'm wondering if that's why he asked. I'm not sure.
Maybe
Imran,
Bitcoin, I don't know.
No. So Daniel, I believe, is saying that.
Yeah.
So Daniel is saying it's a little bit hard to hear you, Kevin. I'm not sure. I know it seems like having wireless headphones there. So I don't know if that is maybe the cause. It sounds okay to me. It sounds fine to me the way it is now. So Daniel, just let us know if it improves. If not, we'll maybe try and adjust and see if that helps. All right. So Matthew is asking if you've ever considered another stock split.
Stop. Before you answer that question, I'm going to ask it this way. Why was the consideration for an APO versus a rights issue?
Thank you.
Or a stock split that was done prior?
Prior. I think this is our 4th raise that we're doing. We include our IPO in 2008. We did 2 rights issues, one in 2015, one in 2019, and then this offer now is an additional public offering. And I did mention our motto, which is buy local,
Buy
own
local.
local.
Right.
Our real purpose is that we said we are going to adopt the tenets of a REIT. What a REIT is a way of democratizing the ownership of real estate investment assets. So our purpose, and in fact, that is part of our purpose, our mission, is that we want to make real estate investing accessible and rewarding to everyone, whether you're a small investor or a large investor. I don't know if a lot of you, and I might sound like I'm going around with it, but bear with me. I don't know if a lot of people know the story of Joan Duncan and Jimmy. Joe Duncan, the way how we describe it now, was a disruptor back in the day. And essentially, what would happen is that money market investments was something that was restricted only to large institutions and high net worth persons. So persons would only be getting high interest rates only if you had very deep pockets. The small investor didn't benefit at all from that. So basically, the philosophy of JMB was to disrupt the market and to give the small investor an opportunity to invest their cash and earn high interest rates, just like the big investors and the big institutions. That's pretty much what a REIT does. It's democratizing the ownership of real estate investing assets. So you're only going to be able to do that if you can offer something to the small investor. Having done the IPO, the two rights issue, the stock split, soft was in 2017, I believe. I look back on the data recently, and we only had 400 shareholders at the end of 2019 after we did our last rights issue. 400 shareholders. Shareholder accounts. Let me clarify that, because there's some institutions that have multiple accounts.
Yeah.
We're not democratizing real estate investing if you only have 400 shareholders. We want to ensure that a lot more people have access to real estate. These same assets are generating these high yields, generating income in hard currency, ownership of assets in foreign countries. That is primarily what our purpose is, and we failed in achieving that if after all of those things we only had 400 shareholder accounts after. I think we're now probably up to just on 700 or 700 now. We want to widen and deepen the ownership of KP, particularly for small investors, because they too can benefit from these same returns that we've been talking about. And the way to do that is through ownership of KP stock. So just like the JMMP history, we want to be a disruptor in that way as well, so that it's not only institutions and pockets can actually benefit from owning real estate assets, high-yielding real estate assets, but you can do that through the ownership of our stock. So I say that to say that having done the rights issue, what we found in those issues is that the existing shareholders would take up their allotment, and those who were renouncing their rights would renounce it to someone else. So there wasn't a lot of volume around for persons to buy. And the complaint we got out of those issues, certainly out of the last issue, that they weren't able to get volume to purchase. We get complaints even from other persons, over that period. The queue is very dry, there's no volume available. So we figured it was a no-brainer for me that we have to go the route of an APO, which is what will allow far more persons to participate, because that is our goal. Far more persons, especially the small investor, to participate in a great investment.
Yeah. So before we go any further, Kevin, thank you for that response, by the way. I believe some persons are not able to hear you. They said that your audio is going in and out. My guess, it's the wireless.
It's probably the wireless.
Yes, I don't know if you want to just try and disconnect.
One side.
Sure.
Yeah. Let me put you backstage quickly, just in case there's any feedback. Okay. All right. Yeah, so I like that response as well. I think that kind of addresses the concern. So, well, let's see what everybody else feels about it.
I'll wait till he comes back, because I'm going to mention the dialogue that was and is still ongoing on Twitter.
Should we?
I will. I'm going to mention it because he answers it well to state that this is what we haven't heard. We didn't hear the background, which is you had the investors that have been complaining that they can't get they want to buy. No, the next question I'm going to bring to you.
on, Chico, hold on. Let's bring it back. Let's bring it back and see.
How is this? Can you hear me?
Let's try again.
Yep, sounds much clearer now.
It
Sound
sounds.
much clearer?
How is it, guys? Let us know. Sounds much better.
Okay, it must have been the headset. Let's get rid of those.
Yeah. Sometimes that happens. So it's either the batteries are low or just the fact that it's wireless. Sometimes it doesn't pick up as
Yeah,
clearly. Yeah, I
I
find wired
got up
mics.
here, and mine does that sometimes too as well if it's not connected.
All right.
Let me do it.
Go
Let me
ahead.
go. All right, so Kevin. So there's been, and I don't know if you saw it. You're busy, so I don't expect you to see this. But there was rousing conversation about KPREIT doing an APO. But what you've given us is an insight as to why you chose the APO, which is great because it's cleared the air. Because you've stated clearly that investors have complained that they didn't have the opportunity to buy more than they want.
I can't get it.
So it's about to get interesting now with this question. So I am of the personal belief that after a company gets to a certain price, people stop thinking that it's attainable or reachable immediately because it might be there. So you are at 9. The APO brings you back to 7. I've actually looked on the company standing and where it is right now, it's fundamentally. That's what I want to say. The word I want to say is fundamentally. On base fundamentals, your market price to your book value is actually pretty good. Your book value is actually just a couple of cents less than your APO value, which in my opinion is a bargain, right? To get.
Yeah, and
At
it's
that
based
point.
on the exchange rate you're using.
Right. What's more interesting though is that with everything that you're about to do when you take on, and Jeremy, we're gonna get to that in short order with the debt. When you take on this capital that you get to clear some very important stuff. The first one is that bridge loan that is gonna bring things down for you.
Yep.
It bodes well for the improvement of the company going forward and that cushion to basically use the cash accordingly very well.
Mm-hmm.
Your earnings is the expectation that would be improved. You've had a 900,000 dividend payment, which is the highest you've ever had from since 2017. It dwarfs anything that you've paid, right? Basically. And now you're changing the way how the dividend strategy is going to be done in terms of doing the dividend payout from funds
Comes from
from
operations.
the FFO. We had funds from operations, right? Which more than likely looks as it to be more. That bodes well as soon as investors see that they can get stable, and that's what KPREIT has been: stable, steady earnings, good dividend payments.
Mhm.
The price goes. Let's expect the price going back up. Then you're in a conundrum again. You're trading maybe too high at that point in time where, what happens then? What are your thought processes then if you can answer?
Well, and
Yeah,
I'll add to that before, but I was gonna say before you answer, Kevin. Matthew is saying that he was mentioning, pretty much asking, where do you want to see the stock price over the next 2 years? I think that kind of will add some context to what you're saying here. So go ahead.
No, that's a crazy question. You don't want my answer. You don't want my answer. But
I just had to say it because I think Matthew has a general issue with APOs, it would seem. So anyway, continue.
Okay.
Please go ahead.
You're right. So a number of things I could say, and I mean, I'll start with an interesting story. I remember when we were doing our last fundraise back in 2019, and we went, we were doing a roadshow and all kinds of stuff, and there were some people who are like, yeah, we don't really like your stock because your stock is not going to grow much. It's not going to give the big flip like the IPOs are doing. So you know what? And I think around that time there were a couple of IPOs that were coming out, and said we'd rather wait for those IPOs. So good luck with your offer. Fast forward today, and I'm looking at my portfolio, my own personal portfolio, and thank God for my KP shares because that's what is saving my portfolio. For most of the last 2 years, that's the only stock that's been in the black. And we put in the prospectus I think it's 60% or over 60% growth in the stock price over the last 2 years since we did our rights since that 2019, the November 2019 raise. Over 60% increase in the value of the stock price over that period. So people had this notion that the stock price would not move, but guess what? It did. And I think it's because the market will always reward well-run, highly performing companies. I think that's the fundamental thing. There are anomalies out there because, we did an analysis internally just looking at, the entire market. And, it's an interesting observation that the best performing stock over the last 2 years is a company that has negative equity and zero operating income. And
let's not call in the names. Let's not call in the names. Yeah.
Well done.
And there are companies that have put out excellent results over that period, and yet their stock prices have not really performed. And it's an interesting conundrum, which I think there needs to be more discussion around.
Baffling.
Because when you watch, if you follow U.S. markets or if you follow U.S. financial news, whenever a company puts out great results, you notice the stock price always jumps on that day, and you're like, yeah, that's how you reward companies and the management and the board of these companies for their stewardship of the company, because that incentive is there. You are supposed to be developing the company and giving the shareholders value through performance, growth in revenues, growth in profits, growth in the cash that you generate. Those are the things that you're supposed to be rewarding, stock prices with. Not based on rumors or some ideas that are floated around. So we need to have a serious conversation about why those stock prices are moving and why some other stock prices are moving. I think that is the critical question that needs to be answered. So if you want to know where I think the stock price is going to be, I don't know. I don't have a crystal ball. I wish I did. I could tell you. If you ask me what I think it's worth, I don't want to give you a number because I don't.
Yeah, again, it's probably best if you don't, because we don't want any issues there. Yeah,
we don't want any issues there. The final thing I'd say, since you brought up the point about book value, Chike, is we've also, from day one when we started this company, we said we're going to follow the tenets of a REIT. So we measure ourselves against US REITs. So we've come up with a composite of 10 different REITs in different sectors to sort of match our portfolio. So I think it's like 4 office, 4 industrial, 2 residential. There's something that's to match our composition. And we look at how we perform vis-a-vis that composite of REITs. And on the issue of price to book, we've noticed that in the US, most of those REITs tend to trade at either multiples or premiums above book value. I think at the $9 price, we were like 1.2 times book value. But when we look at the composite, it was 2 times book value. So there is some notion out there that real estate companies should be trading at book value or below. I don't know where that idea came from, but what I know from looking at overseas REITs, they tend to trade at premiums to book value. And in KP's case, we're fairly conservative in our valuation policy. And I mean, if you want to take a deeper dive, you can look into our audited financial statements, and I would point you to note 3M, M or L, M, I think it's M or L, just check, where we state what our valuation policy is. Essentially we value properties on the 2-year anniversary of it. So let's say we acquired a property in 2020. We would carry it at cost for 2 years, and then, this year, 2022, is when we'll actually do the appraisal. So, for example, the 2 properties we acquired in 2020, which is Harbor Center and the East Ashernine Rd property, those won't be due for valuation until this year. So, one could argue that maybe we are undervaluing, or what is we're reporting as equity is not real true value, because some of these assets haven't been valued for 2 years. I don't know. Those are debatable questions, but
Yeah, interesting point. And I think here one of the things that we normally say here to our community is that you want to make the assessment of the company based on the type of company. I think this expectation that all stocks from all industries will perform the same way.
Same way. Yeah,
Absolutely.
I think that's an unrealistic expectation, because if it is that this company is saying, though we don't have a REIT officially in Jamaica, but that's the model, then you need to measure it, as you said, based on other REITs in other jurisdictions, and that's how you want to assess the company. I think it's definitely something that will be an ongoing discussion. I think each person just has to decide what matters most to them, right? So I think, thank you so much for the way that you answered it. Hopefully that, addresses the concern that was there as to why you chose to do the APO versus, rights issue. So if anybody else has any questions, I'm sure they can just post it. But I want us to move on in the interest of time here.
Sure.
So,
for the record, I can talk about KP for hours. So.
Okay, that's good. So, one of the questions that our community members had was, what's your target debt equity split? All right, because you're going to be clearing that bridge loan, sure, but what it is, what's a target that you're going for in terms of debt to equity?
Yeah, so I think as at the end of 2021, we're at about 53%.
That's right.
Debt to equity split. Yeah, okay, somewhere in that region. And I think that may be slightly up from prior. I don't remember, but that has largely been driven by that same $700 million bridge financing. So once that pays out, then obviously that number would fall. What's a target? Again, we compare ourselves with those same US REITs, and we've seen a very high range. But I would say our target is anywhere sort of like a 2/3, 1/3 split. So essentially, our debt would represent no more than 2/3 of our equity at any as a max.
Okay.
So on that basis, we're still under leveraged. We do have more capacity to borrow.
Okay.
And 2/3 is still fairly conservative when we compare ourselves to other REITs.
Okay. All right, thank you for that. So we spoke about, one of the questions were, how do you select investment opportunities? I think we covered that already, so I'll skip that question. The next question I see here is, will you do a stock buyback within the next 5 to 10 years? Is that something that you have in your plans or intentions, etc.?
We've always done buyback.
Yeah, are you allowed to answer that question?
Yeah, actually,
we've
yes,
always
that's
done
true.
buyback.
You've been doing buybacks.
Prospectus, we've outlined our history of buybacks, so we've always done.
Yes,
buyback.
we've seen that.
Yeah.
Okay, so then it's something that you're open to, and depending on the decision, you may or may not. Okay.
We always.
All right, great. Yes.
The stock is undervalued.
Yeah.
Okay. All right. Next question that we have here is, one person here is concerned about the threat of. I think the way that I phrase the question is, they're asking if you see any risk to companies having more employees work at home or work online. Do you still see the viability of the corporate rentals growing?
Yeah, and that's a great question, because it's something that's been debated for quite some while now. Yeah. My personal view, and certainly how we operate at KP, is that we have a hybrid model. Some days work from home, some days in the office, because it is important to have the collaborative environment within which to work. I think it helps to build not just team spirit, but it improves productivity. But also there's some value, a lot of value from working from home. And I think that hybrid model is what is going to continue going forward. What we have noticed, though, is certainly from our office portfolio, is that we have not seen a decline in the demand for office space. We have tenants in the Cayman Islands, for example, in one property where they want more space. Because the thing that a lot of people tend to ignore is that companies aren't static. Companies are growing. The economy is growing. Companies are growing. So they're going to need whether to hire more persons, And even if you're doing the hybrid model, you're still going to need space because nobody's going to share a desk.
Right.
So people ignore the growth element of it. So there is always going to be a demand for office space. And on the flip side is if you think about it, there are, trillions and trillions of square feet of office space globally. That's not going to disappear tomorrow under no circumstance.
Yeah,
Another interesting point too is sorry, to add to that is that even though the demand for the space is constant or growing, it also hasn't affected rental rates. We've seen that in Jamaica, in the Cayman Islands, and in the US, because we do participate in a fund that is primarily office space, and they've been seeing increased demand and increased values on their office properties over the last year or so.
Okay. And I was going to say, Jamaica seems to be one of those countries where there's a reluctance to allow persons to work from home. So, I mean, it's once the restrictions were lifted, I hear so many people saying they now have to go back to the office. And some persons also actually use it as an opportunity to just be away from home. So, as you said, those hybrid scenarios later on, I do see being more of what is done. Because truthfully, a lot of persons would prefer to use the company's resources than their own at home. And that's just how it works, right?
Yeah.
I don't like traffic.
Well, that's the thing. But I mean, there are ways around that, right? You leave out earlier, you stay at work later, things like that you can do. All right. So yeah. Matthew is asking if you would consider increasing investments in training your employees. I'm not sure if that's.
I don't know what that's coming from.
Investment.
Matthew, is that question for Kevin? Is that a question in general? Let me know.
Because your employee footprint is small. Remind me, it's about 68 people, right? That's what I remember reading. Was it?
We're now at 11.
Yeah.
We're growing. We're a typical example of that. We are growing.
Oh, 11. Right. Corrections. Yeah. Right. No,
Yes.
Yeah,
I'm not sure. Matthew, confirm if that question is for Kevin. So Derby County is saying, so Matthew is saying
real estate
courses. Yeah, in terms of real estate courses. Okay.
It's a thought that's crossed my mind. I won't lie.
Interesting.
I think there is a growing market for persons who are interested in real estate investing, and I don't think there is quite an avenue in that space.
There isn't.
I mean there's courses around real estate in general, that's offered through the real estate board, for example, but there's nothing on real estate investing. But if you're interested, there are a number of valuable resources on YouTube, for example. So if you want to learn more about that, you can try those out.
Yeah, and we've actually started a real estate series on our YouTube channel because we realize the same, that there's not an abundance of content in terms of real estate investing. So we covered videos in terms of buying your first home, talking about the process, etc. But there's a side of real estate investing that I'm sure that the space could benefit from as well. So I think
and that's an interesting point. That's an interesting point, because most persons, when they think about real estate, they think about their primary residence, and that's not investing. The value of that property may appreciate over time, but that's not really investing. You're not generating any cash flows, for example, from it.
Exactly.
And I call that shelter, not investing. And when having made that investment, you really don't have a lot of cash to outlay, a huge amount of cash to outlay to buy an investment property, a warehouse property or an office building. Most persons don't have $100 million, $200 million, $800 million to buy a property, and this is why a REIT or
is an
entrant vehicle for you to get to think and act like an owner, which is part of our own philosophy. That's how you participate in real estate investing, by buying into a real estate investing company.
Yeah, agreed. So Robert is asking if there are any plans for Kingston Properties to venture into construction of houses.
In Jamaica, no.
It didn't say, I guess, in general.
In general, I would say no. You know, that isn't an area that we have a great level of expertise in. There are tons of other people out there who have experience in that area. Would leave that space to them. We've sort of cornered the industrial and office space, and we want to stay in that zone. We've done fairly well in residential or multifamily space in the US, so we'll do that. But and I'll tell you why we like the US for that area is, you know, delinquency tends to be very low. You know, rent collections are good in those markets because, you know, if you're default on your rent, that affects your credit score, and you know that's a market that pays serious attention to stuff like that. So, you know, until we have a framework here in Jamaica where, you know, the landlord is so protected, then, you know, we'd rather focus on markets where there's greater protection.
That segues into a question that I wanted to ask then, on that same point, and it has to do with risk. As it stands right now, right, we're coming out of the pandemic of itself, whether the pandemic is still here or not.
Yeah.
But what are some of the risks? So, because economically right now, what has happened now, we've moved from pandemic risk now to the economic risk. We've got the war, we've got inflation, we've got the United States pricing in possible recession. All investors are making their positions accordingly. Now, the REIT has normally shown to actually be a bit recession proof in some way, because you've been going through this from very resilient. Not, I wouldn't say right. So resilient because you've been doing this for years, you can see, and you've gone through different stages, or different economic cycles that have happened. What are you concerned with now with respect to risk for the next 2 years? I want 2 because that's more closer.
For the next 2 years, I mean, is the uncertainty around, you know, what central banks are going to do, because I think they're faced with a conundrum. You know, the central banks focus on prices, so they focus on inflation. That is their core responsibility. Right. And the tool they use to focus on that is interest rates.
Right.
But we're in a very delicate situation. You know, coming out of a or still in pandemic, whatever it is. So economies are still fairly weak. So you can't just, you know, tomorrow jack up interest rates up to 4 or 5%, you know, because you still have an economy that is recovering. So they're in a bit of a conundrum. So you have to be cautious and watching the statements that are coming out of you know, those central banks. So that sort of uncertainty, you know, it is the one thing that we're watching. Fundamentally, I think that, you know, the decision, fiscal and monetary policy will have to meet somewhere, and governments are going to, you know, find ways to make sure that the economy does not slow down. You know, recession is not the kind of thing that is good for any government. So, you know, that's always going to override at the end of the day. So I'm less concerned about the economic situation for certain jurisdictions, because I think based on our history, say, for example, in the Cayman Islands, they're likely to remain fairly resilient. And I say that because of our own experience of the last 2 years, whereas, sure, they went into lockdown and were in lockdown for a long period of time. But we had I mean, I think of all the markets, that's the market where we had the best collections, you know.
Right.
People, and so we think that's a fairly resilient market, and we want to continue to maintain our presence in that market. Cayman has been very aggressive about, you know, attracting new business, and they do have a target in terms of the growth in the population. So that's a market we think that's going to remain fairly strong going forward. You know, I think that's my main. The other concern I would have possibly would have to be the issues surrounding climate change, and which is why we're so, you know, concerned about sustainability, and we're preaching that gospel everywhere, not just in our organization, but, you know, certainly with in the communities that we have properties. we have to be mindful that, we can have more frequent and stronger storms that could affect, the jurisdictions in which we have properties. I mean, we've
Right.
done a little bit of mitigation with that, so, going into Atlanta, reducing Florida, that sort of thing. I think most of these countries have fairly good building codes, so, and we are fully insured, we make sure that we're fully insured to protect our assets. So I would say, just the uncertainty around what central banks are going to do over the next 2 years, as well as climate change. Those would be the two things.
Yeah. So
I
that
think-
reminds me of the question that was asked on Twitter. So in terms of, I said we would ask you near the end, in terms of your whole,
All right.
going green initiative, what's your vision for that? And, help persons understand what is currently being done or what has been done and where you see that project going.
Yeah, there are very various aspects to it that we've been looking at. And let's start with one of the most important ones, certainly to me, is the use of heavy fuel oil and how much we conserve in terms of electricity. So we've been looking at, for example, what we did with the Grenada Crescent building, KPREIT building in New Kingston, is that we changed the air condition, the outdated air conditioning system, which was very inefficient. It cost us a lot of money on servicing. It obviously used up a lot of energy, and we changed that to a new, more efficient air conditioning system, which has greater control of airflow, which allows us, and what we've seen is anywhere between 30 and 40% reduction in the amount of electricity that is being used.
Nice.
And so that's been a huge savings for that property. Another service that we're seriously looking at is also solar for some of our properties, because again, electricity consumption is a huge cost, and that ties back to the demand for heavy fuel oil, which I'll leave it at that. The other thing to think about is fresh air flow. Certainly one of the things the pandemic has opened our eyes to is that, it's good to get fresh air in some of these office spaces now and again, just to circulate some of the germs out, if you want to call it that. So even with the aircon system, we put in filters that help to sort of recirculate the air, and filter out, stuff floating around in it. But also in terms of how you build buildings or how you configure spaces, more open so that persons aren't as close as they used to be, and you're allowing in more natural light, so you're not using more of the light switches, or more fresh air flowing into the building, so it's cooler. You're not using the air conditioning as much as you used to. Another aspect is water conservation. Putting in rainwater harvesting stations at our properties, and those are particularly
Nice.
for those properties where where you have maintenance, for example. You have like a green area, and let's use recycled water, use rainwater.
Right.
So we have catchment
Right.
areas, and we'll use those for those areas, and we're looking even further and exploring things such as how do you deal with gray water, for example? Can we recycle that and use that also for other purposes at various properties? So we do have a plan to have a certain number of our properties green certified by an international agency in 3 years' time. And so we've been working with a number of bodies, including NEPA here, in helping us to achieve that goal. Once we can start doing that, because a lot of people sometimes just think that it's a lot of expense, the expense of doing solar, the expense of putting rainwater harvesting, but they don't think about the savings at the end of the day. So we do have an extensive program, and it's something that we're working on. What we will do is at some point we'll publish our green policy on our website.
Great.
So persons will be
Nice.
able to take a look at it, and and as
Okay,
shareholders,
great.
it's something that can be discussed at the AGM.
So,
That would be good, definitely. It would be good to see that. I think the person was asking about it on Twitter. Hopefully he's watching, but I'll mention the response that you mentioned. There's hopefully something that will be documented soon. And
Yeah.
great, thank you for that. I think, guys, if there are any additional questions for Kevin, please post it now so we can ask him. I think in general, for me, I'm probably just, based on based on the discussion that we've been having in the chat, I'll just ask you to share. I'm hoping that this is a question that you can answer, but based on the type of company Kingston Properties currently is, the way that you're made up, what would you say is the ideal investor or type of investor in Kingston Properties?
Yeah, I mean, it goes back to our purpose, providing access and making it rewarding for everyone, investors at all levels, whether it's institution or retail. I personally would like to see more individual investors, shareholders, just because it creates more liquidity for the market, so there's more trading activity. There'll be less volatility in the stock price because sometimes it moves in sort of crazy fashion. I think having more shareholders trading the stock regularly, I think, would create a greater balance in terms of how the stock price moves. So I definitely would like to see more individual investors, and it's a way of diversifying your investments. You're combining both real estate and equities in one. In a time of high inflation, a time of high inflation, that's a combination of two great asset classes in one, which there's nothing better that I can think of that you could buy.
Okay.
Question. Hold on. So with respect to it's about the green policy, yes, but it's actually more about cost containment. With respect to the buildings that can actually facilitate it more, have you found that your tenants are they're not just receptive, but they're actually asking, especially for Jamaica, energy costs are through the roof as far as I'm concerned, and many are concerned. Have you found that is something that they are more receptive to and looking for every single time with respect to solar or renewable energy in terms of how they can bring down their cost bill, their electricity bill, by being in your property?
Yeah, I think there needs to be a lot more education around it, because what we're seeing now is more of international companies that are making that as a requirement. Some of the multilaterals, for example, who there's a particular multilateral who's built their own office space, which is I think is going to be green certified, and that is a requirement for them because sustainability is very important to them. I think over time, once tenants can see how they can benefit from this, in terms of the savings, then that's going to become more of a request, which is something that most landlords will have to prepare themselves for going forward.
Yeah. Okay. Yeah. All right. So D21 Football, I think this is our final question. He's asking, what is your recommendation to get started in terms of owning real estate, right? He said he's 17 years old and he would like your advice as to how he can, be on the path to owning real estate. And I'll add to that, maybe eventually investing in real estate, because he noted that difference in terms of your previous answer.
Yeah, and this is the thing about real estate, because real estate assets really require a lot of cash. And that is why, our product, which is what we offer, allows small investors to start investing in real estate assets by purchasing our shares. That's one way you could start. You could start by, accumulating shares into a REIT or a real estate investing company. Start accumulating in that, and then, if you continue to do that consistently, you could get to the state where you could actually purchase a real estate asset. But the problem really has always been you require a huge outlay of cash to acquire a real estate asset. And this is why a REIT is the perfect vehicle for persons who don't have a lot of cash to acquire and get exposure to real estate assets.
Yeah. And I mean, just from personal experience, I'll say, and one of the investment strategies, so real estate is a part of my personal portfolio. And I find that starting with stocks, the lowest barrier of entry I can think of for any form of investing, when you build up enough capital, then you can make a down payment, then you want to save, invest again, and then build up again. But as Kevin said, when you live in the property, I wouldn't consider that an investment either. So if you're interested in investing in real estate, understand that it will require capital. You will have certain expenses to deal with in terms of maintaining that property taxes, etc. So if you're renting it, you want to be able to do it in a profitable way. So you have to consider the cost of owning the home, meaning the mortgage you're paying in terms of how much you're able to rent it for, and some other things that you want to consider. Actually, I recommend just watching the video that we did on buying your first home. That will explain some of the expenses. Yeah. Personally, I mean, we're on our second property now, and I can tell you it is very cash intensive, especially if
things break.
You either pay more to buy something brand new, or as KPREIT has their value add. You're going to have to spend some money to improve the property, which we've had to do for our first home. And I learned this idea a few years ago of that you can actually over improve your home if you spend past a certain amount of money. I didn't know that because we've spent a lot of money on our current home to just fix certain things that we didn't even know were issues to start. So just understand that if real estate is your focus, I always say to persons, if you're interested in real estate, then real estate stocks should be where you should start looking at, because you get the upside without the risk and the expense and all the headaches of actually owning the property, unless that's something that you are ready to undertake. Hopefully that's helpful for you in terms of both our responses. And I believe that's it. Chike, do you have any other questions?
There's actually a question from Imran that's just because it's connected to me, I'm going to ask it.
So Chike is from Guyana, by the way. Kevin, you should know. So
yeah.
And
Imran asks, and this is Guyana has vast expanses of undeveloped and underdeveloped land. So he was asking if you had any thoughts or plans to be looking, especially now with the big oil boom, because I'm following them every day. I'm seeing that they're doing a whole bunch of different, they're doing real estate a lot now, but they're going to use that land now because they're going to need wharves, berthing for the ships that are there. They're building a whole setup for the refinery and so forth. So the question is Guyana on your radar as one of the places that can be?
It has been. I mean, we've looked at opportunities in Guyana. Haven't pulled the trigger on any yet, but we've looked at some pretty decent opportunities in Guyana, in retail, in industrial, in quasi-residential. When I say quasi, it's like condotel type things. There's some very exciting projects going on in Guyana. We haven't pulled the trigger on any yet, but we've looked at opportunities there.
Good stuff.
Yeah, great. So Mr. Richards, this was an excellent conversation. I'm so happy that you agreed to join us here.
As I said, I can talk about KP all day.
Yes, that's definitely something we can talk about, this kind of thing all day as well. So thank you so much. I'll say to persons watching on the replay, if you do have any questions for Kevin, please just leave it in the comments. We'll forward it to him via email, and he'll be sure to share his response. I found that the social media team for Kingston Properties to be very, very responsive.
Excellent.
I was going to suggest that. I was going to suggest they could at us.
Yeah. So post your questions on social media as well. And as a shareholder, you can reach out to the company anytime, right? Ask your questions. As a shareholder, you have the right to get your answers. So if there's anything you see in the prospectus that you'd like to know more about, feel free to reach out, ask them that question. We do recommend, of course, if you're considering the offer, speak to a licensed financial advisor, get to see if it fits into what you're hoping to accomplish, and make a sound investment decision. So thank you so much, Mr. Richards. Really do appreciate it.
I just want to add that, it's not just shareholders, prospective investors as well can reach out to us.
Yes. Agreed. Yes, that is correct. So, all right, I'm just doing a quick glance here if there's anything. All right, I'll ask you to give us 1 more minute for just 2 more questions that I see here.
Sure.
So I think Matthew is asking, what do you think of the luxury real estate market in Jamaica?
The luxury real estate, I assume you're meaning in the residential.
Yeah, it is. It definitely is.
That's what I think as well.
What I personally think?
I mean, based on what we've been discussing, it doesn't seem to fit Kingston Properties focus.
Yeah,
so I mean,
it doesn't, and they're better qualified people who could speak on that space.
Yeah.
I have very little knowledge. I don't follow too much on luxury properties. The only observation I can make is that, when you look at a similar type property, you look at a property in Jamaica that you consider luxury, and you look at a similar type property in the Cayman Islands, it's worth 4 or 5 times. So, and Cayman is like 50 minutes away by flight. It's an interesting discussion about why, one country neighboring the other has such a high value real estate as opposed to this one. So we have some ways to go.
Interesting indeed.
And Paul is asking for a closing statement to help with any investor who might be on the fence. Again, if anything you're allowed to say, let me say it that way, that you may want to say to somebody who's trying to decide on investing in Kingston Properties.
Yeah.
So my only advice would be that you read the prospectus thoroughly. And if there's any question you have in the prospectus, feel free to reach out to us.
Yeah.
Or your broker. I mean, as again, your broker, if you have questions about the investment itself, but if you want to know about the company, feel free to add us on social media, email us at info@kpreit.com, and we will respond.
And I thought the prospectus was extremely well detailed, very clear. It was very easy to read. Like when I first saw the page number, I was like 158 pages, but then it was so easy to read because there's a lot.
I went through it in the night. I literally did it the same night, and I was like, what I appreciate about not just the prospectus though, is just about how you put the information. You put out a lot of detailed information. So the first question that anybody has to ask, which is, how does this company make money? How does a dollar actually get generated? It's extremely clear as to what you're into, how it's broken down, and you see the progression, as you change things from report to report. So kudos to that.
Yeah, we pride ourselves on being very transparent. That's important because investor relations is an important thing for us.
Yeah, and I mean, I shouldn't have to guess as to whether or not this investment is right. If I read a prospectus and I have more questions than answers, then that's not likely something that I'm going to move forward with at all. So, yeah, very, 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 very good job to the team that worked on it. Excellent information. My only remark there would be some of the images could have been of a higher quality, but that's probably something that, probably something that is overlooked.
Noted.
All right. So thank you so much again. Hopefully we'll get to speak again soon. I was happy to hear that you are interested in financial literacy and seeing the space grow, because that is what we're hoping for as well. So we're hoping that more and more persons will be willing, as you were, to join us, share their knowledge, share their insight, and would love to speak about some other topics with you in the future once schedule allows, of course. So
anytime.
great. Thank you so much. All right. So
All right, thanks, guys. Have a great evening.
Thank
Have
you,
a great
Kevin.
week, though.
You too. Right.
All right, guys. So thank you so much for being a part of this discussion. Please be sure to watch the video on the prospectus review, read it through. It's the kind of investment that I like to say, real estate in general, if you need to understand the type of investment that it is. So let me say that first and foremost. And Chiki, I think you agree there. It's not the same for everybody. But if you're interested in real estate, if you're interested in like stable, predictable returns, those kind of things, slow and steady, it's going to suit you, right? So I really like the information that's there. I think if you read it, take the time, you'll be very clear as to whether or not you want to purchase or not. That's not for us to say. Our job was just to share the information with you, answer your questions. And I think that we did a good job of that. I don't think I have any questions now coming out of that conversation. And I can clearly see where the company is headed, what they're trying to accomplish, who they're appealing to, and so on. So that discussion about whether or not it should be rights issue or APO, I think that was... I think those who have made up their mind about it will just have made up their mind, and that's okay, right? So I like to say that if it's your opinion, it's not right or wrong, it's just how you feel. That's completely okay, right? So let me see if there's any other questions. So if you want a response, Alistair, just it's KPREIT on all social media platforms. Again, they're very responsive. So just tag them, send them a DM, anything like that, or it's info@kpreit.com, and I'm sure they'll respond timely there as well. All right, let me see if there are any other questions before we close. Guys, join us. I think we're going to be doing the review of Tropical Battery next week. Join us for that stock review. We're going to have our weekly stock market update, I think, on Sunday. No, we can't do it tomorrow. Tomorrow is a holiday. I don't think my wife will allow me to do a video.
Take your rest.
Let's do it next week, Tuesday. We'll do our update that we normally do on Fridays on Tuesday. Join us on Telegram. I think I've said everything else before. Yes, definitely, Matthew. I think we'll just have a discussion about it.
Sure.
We'll
It's
have
needed.
a in-person meeting.
It's needed, and persons want to actually, and persons with knowledge, by the way, want to have that discussion, because you really need to understand it's not all bad that you're thinking of like that when it's properly explained. So
yeah, agreed. All right, guys, so we'll see you in the next video. Thank you for watching. Remember to like the video. It helps us greatly. So please do take care.
All right. Take care.